Ashok Leyland is a business in focus. They have had what you could argue has been a strong quarter for them in quarter 3 as well. This follows an inline but a robust growth in quarter 2 as well. What does this portend for the year at large, wherein there are mixed trends around what could happen to the industry demand at the MHCV and the market shares that each of these companies have. Mr. Shenu Agarwal, MD and CEO of the company, and Mr. Gopal Mahadevan, whole-time director and CFO, join us right now to talk about the quarter, albeit the last 9 months, and what could happen in the calendar year 24. Gentlemen, thanks so much for taking the time out. At the outset, did the quarter meet the guidance, Mr. Agarwal, or would you have hoped for some more optimism in the reported numbers?
No, we are very happy with actually the achievement on the margin front. When the year started, we had aimed at achieving a double-digit EBITDA for the whole year. But we could achieve 10% EBITDA in the very first quarter of the year. Then in second quarter, we went beyond 11%. And in third quarter, we are already at 12 now. Quarter 4 is normally the strongest quarter for the stevia industry in terms of top line and volumes. And therefore, we will have additionally some economies of scale there. Plus our efforts on pricing, our efforts on cost reduction will also play out a little bit better going forward. So I think we will only improve on the trajectory of the first 3 quarters here. We are very happy also because, in the investors meet last year, we said that we want to move to mid-teen EBITDA levels in the medium term, which is like 3-4 years out. But already having achieved 12% and hoping for even a better performance in quarter 4, we think we are moving very well on our plans.
So multiple factors that people in the research industry as well as us houses kind of think about, maybe an industry upcycle, maybe better realizations, in your case even higher defense revenues, all of these contributing, heady mix, and you reckon that this could last for the foreseeable future?
See, what gives us confidence is also, it's not just the MHCV story which is playing out well for us in terms of margins or even in terms of penetration. But also all our other businesses are doing fantastically well. And I think they will continue to do well. And I'll give you some examples. So for example, LCV business, actually the market is slightly down, but we are doing well above the market growth. And therefore, we have been able to increase our market share in the LCV business. Now, we used to be number 3 player in the 2 to 3.5 ton segment, but we have now jumped to number 2. Right? So that is a great progress. On the defense side, we have been able to more than triple our top line this year as compared to the last year. On the parts business, which is very high margin business, last year we had mammoth growth in our parts business. And we were afraid that whether we will be able to top it up this year, but very happy that more than 30% growth we have been able to clock in the parts business as well. And finally, power solution business, which is also a good margin business and strategic to us as well. We have a record year this year so far, and I think by end of the year we'll create a all-time high record in that business also.
Mr. Mahadevan, sweet spot to be in such a case. You've seen many cycles like these. I mean, does it look very strong? Because, and again, your role within that, right? Because MHCV cycle looks strong, but unless I'm wrong, and if at the cost of sounding like I'm nitpicking, have the shares come off a little bit, and is this cyclical in nature? How do you play a part in that cycle as well?
You see, while to look at the market share is very, very important, and we have a very clear focus on that. We've shared with investors that we would want to grow faster than the market, and that's our strategy. But to measure it quarter on quarter may not be the best thing to do, because there are factors in a quarter where you may. For example, there could be geographical factors, for instance, right? If the South grows more, our share could grow more. If the South grows a little less, you technically see that the maths don't work out. And the larger trajectory is, are we doing all the right things to get post a growth which is faster than the market? And that's exactly what we're doing. We are enhancing our presence even further in the North. We want to ensure that, we have a much larger footprint in the North and the East, and we are rolling out, dealerships and service centers right across. And I believe that this should start paying off dividends in the short to medium term. The second thing is industry leading products. So it's very important important. We have been raising the bar on the industry for quite some time now, maybe even the past 50 years. And we will continue to do that as a strategy. And we have done that in EVs as well. And we will continue to do that because I think that's another great way to actually get the customers inside. The third bit is, on the pricing front. I think while we will do all of this, we would want to ensure that, we keep adjusting the prices, increasing them, improving the margins, so that on a whole, on an overall basis, not only does the company grow, but the profitability of the company is also enhanced. And there comes in what we shared in the earlier part of the year, that our aspiration is to grow faster than the market and at the same time also try and reach for that mid-teen EBITDA.
Got it. And I'll come to the EBITDA, but just a clarification here. And if my numbers serve me right, from in Q3 FY23, if I'm not wrong, it was about 32.9% MHCV, just MHCV, and it's come down to sub 30. So it's not technically just the QOQ comparison I'm referring to. Are you comfortable with that? Because you may have in your targets, as you mentioned, profitable growth happening at a good pace and not necessarily looking at the MHCV market share in absolute terms.
Well, let me answer it this way. We are not uncomfortable with that, but we are not comfortable with it either. So we will possibly try to stretch it in the coming months, but we will do it the right way.
Fair call. Just a word on EBITDA, because that's obviously stood out. I think in some sense, Mr. Agarwal started talking about it as well. You eclipsed the targets that you may have set out over a 3-year period. I'm sure you're not gonna over-promise and under-deliver in any fashion. So are you kind of still sticking to the earlier targets that you had laid out, or is the cycle and the cost structures and the pricing strong enough for you to be a bit more optimistic about the 2-3 year target, as the case may be?
I think we are well on our course for the target that we set ourselves, and we'll keep you updated. I think we're doing all the right things. I think the team has done a wonderful job in terms of, one, of course, enhancing our top line. We are, as I mentioned about our distribution, our products. The second bit is on the huge cost reduction initiatives that we have taken up as a program. It's not one-off. It's not for a quarter. It's not for 6 months, where methodically we are taking out cost out of the material, but enhancing the performance of the vehicles, and also working very closely with our vendors. We are kind of saying, how do we actually offer better solutions to our customers even when we take cost out? The third one, of course, is astute middle line management. I think if all of these things work, I think there is still enough steam left for us to deliver on the mid-teen margins that we have been looking at.
Okay. Mr. Agarwal, as much as the conversation around capex in the budget was very loud, it's still a very large, heady number. Private capex yet to see a meaningful fray. But if government and central and state capex continues the way it is, and at some point of time, private capex, infra projects, etc., all actually become even stronger, does this set the stage for a slightly longer up cycle than what previous cycles might have been? Do you guys give this any kind of thought about whether the length of the cycle could be longer this time around, simply because corporate India balance sheet deleverage, they will invest, hopefully the global growth mends itself, and therefore there will be some animal spirits back? Any thoughts that you have on this?
Definitely. I think I would like to start by saying that the way our country is moving, it would be very, very wrong to project the future looking at the history. So even I get asked this question very often. I'm very new to the CV industry. Yeah, but they tell me, okay, this has been the cycle, this has been the history, and therefore, something would happen later. I think the way our country is growing, we should not be looking at that. I think we should be looking at more macroeconomic factors going ahead. We should be looking at the trend. We should be looking at the focus of the government. You rightly said that interim budget gave us even more confidence about the things to come, because of not just the higher allocations, but also because of the consistency of the government in the way it is approaching to build this economy. And CV industry is very well kind of intertwined with the overall economic activity of the country or the GDP growth. And we are in I think, the best phase that this country has ever seen. I think I really am very, very optimistic about the medium and long-term prospects of the CV industry.
Okay. And in which case, Mr. Mahadevan, I'd like to come to you and then the follow-up to Mr. Agarwal before we wrap up this conversation. Some estimates talk of how the quantum of free cash flow that you'll generate over the next 2 or 3 years is seriously large. I mean, average annual free cash flow as per one note is close to 3,000 odd crores over the course of the next 3 years. That is serious money getting generated to be invested or returned. Are these numbers largely in line? And what do you do with this kind of quantum of free cash flow generation?
Well, I think if we start, delivering and achieving the numbers that we talked about in profitability in EBITDA, I think cash flows would also start coming in. But we would use it, both for returning as well as for investing, as you rightly put it. So there are investment plans. Capital allocation is an important discussion that the entire senior leadership is addressing. We need to make investments into alternative technologies like hydrogen ICE, hydrogen fuel cell, EV trucks, battery electric vehicles and trucks. And then after that, we got Switch. So I think we have our plans pretty well laid out. But at the same time, I can let you know that the balance sheet of Ashok Leyland is very, very strong today. The debt equity is hardly 0.2. We have about 1,700 crores of debt at the moment. And that is, you must remember, after investing nearly 950 crores into both Switch and EV businesses. So we believe that if we continue on that trajectory, we should be able to fund all our growth from our internal accruals. And if there is a minor borrowing required, we'll do that.
No, actually, hence my question, because you are not heavily indebted at all. In fact, we were doing this analysis of the top 100 corporates in India, and auto sector has seen some substantial jump in cash on books as well, free cash flow generation. So is there a large investment plan in the offing because of this whole growth around EV that is being spoken about? I'm just trying to understand, what would you do? I mean, would the CapEx plans get enhanced because of the availability of cash and the growth prospects that you foresee over the next 3 years? Maybe Mr. Agarwal can take it. You can give it a shot, Mr. Mahadevan, whatever.
Yeah. So see, there are 2 or 3 emerging areas, that we are looking at very, very seriously. One is EV. We already have created Switch and OHM, right? So far, we haven't had any external investor. And right now, like Gopal explained, our balance sheet is very, very strong to actually fund both these companies for the foreseeable future. Yeah, so that we will continue to do. It's not that we have achieved everything as far as Switch and OHM is concerned. We still have a lot of white spaces in the products that Switch is doing right now. We still have to address even higher tonnage vehicles within Switch. Right now, we have only started 2 to 3.5 ton. And then 3.5 to 7.5 ton is another white space, which is very attractive, right? So a lot of investments would be made there as we develop new products. Even on the buses, we are right now into 12 meter, we are into double-decker electric, but we have white spaces available in 9 meter, 7 meter, and even lower length vehicles, right? Even within Ashok Leyland, the whole alternative fuel technology, we are putting a lot of focus as far as medium and heavy duty trucks are concerned. Although we have just launched a 14-ton Boss electric truck, we just handed over the first key to the first ever customer, but there is a lot of more work to be done. It is tippers, it is tractor trailers, it is electric, it is hydrogen ICE, it is fuel cell. All this would need a huge amount of investment. And actually, that is the reason we are so much hell-bent on focusing on generating better cash flows, better profits. Because we know that all this, although will take time, this transition will take time, but we'll have to be ready ahead of time. We'll have to be the best products in the market. So I think there are enough opportunities even within the Ashok Leyland ecosystem, for Ashok Leyland to be future ready in all aspects.
Great. All the best for that. Mr. Mahadevan, you want to add something to that? Or I have one last question, but you want to add something to that?
No, I don't think so. I think Shinu has mentioned it. We're looking at it at one is generation of cash and the other one is deployment of cash. I think these are, while they are in a way connected, but these are separate plans.
Fair call. I'll just end this interview with this point that Mr. Agarwal mentioned. You still don't have an investor out there. You may not need it, but could it be prudent to get one? Valuation established, something like that? Are you thinking of getting somebody in calendar year 24?
Yeah, we are certainly looking at that. We are in discussions with investors. What we want to do is to get the right-minded investor because, investing into EVs, a business such as that, which is nascent today, requires a very mature relationship. this is more medium term and long term. So we want to ensure that we get the right investor, and we are not in a hurry. At the same time, we are not slow, and Ashok Leyland balance sheet is there in the interim to take care of whatever requirement that Switch has.
But you kind of do it in the current calendar? I mean, is there a timeline that you set?
We have set a timeline. Let's hope that we are able to make an announcement in the current calendar or somewhere during that time.
Great. Gentlemen, all the best. Thank you so much for taking the time out and speaking to us at NDTV Profit. Really appreciate your time.
Thank you.
Thank you.
And viewers, thanks for tuning in.